General Motors Company, NYSE, GM, Comprehensive Stock Analysis. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions. Company overview. General Motors Company, NYSE, GM, is a global automotive industry leader headquartered in Detroit, Michigan. With a diverse portfolio encompassing brands such as Chevrolet, GMC, Buick, and Cadillac, GM operates in over 100 countries. The company is undergoing a significant transformation, focusing on electric vehicles, EVs, autonomous driving technologies, and sustainable mobility solutions. Financial performance. As of May 24, 2025, GM's stock is trading at $48.69 per share. In the first quarter of 2025, the company reported revenue of $44.0 billion, a 2.3% increase from the previous year. Net income attributable to stockholders was $2.8 billion, a 6.6% decrease year-over-year. Adjusted earnings before interest and taxes, EBIT, stood at $3.5 billion, reflecting a 9.8% decline from Q1 2024. Despite these challenges, GM's diluted earnings per share, EPS, increased by 30.9% to $3.35, driven by share repurchases and improved operational efficiency. For the full year 2025, GM projects net income attributable to stockholders between $11.2 billion and $12.5 billion, with adjusted EBIT ranging from $13.7 billion to $15.7 billion. The company anticipates automotive operating cash flow between $21.0 billion and $24.0 billion, and adjusted automotive free cash flow between $11.0 billion and $13.0 billion. GM Investors Plus One Second Plus One dividend policy and share repurchase program. In February 2025, GM's board of directors approved a 25% increase in its quarterly dividend, raising it from 12 cents per share to 15 cents per share. This adjustment reflects the company's confidence in its financial health and commitment to returning capital to shareholders. Palmetto Grain. Additionally, GM announced a $6 billion share repurchase program, including a $2 billion accelerated share repurchase, ASR, to be executed in the first half of 2025. The ASR program is expected to conclude in the second quarter of 2025. GM News Plus One. Palmetto Grain Plus One strategic initiatives. Electric vehicle transformation. GM is aggressively pursuing an all-electric future, aiming to offer a diverse range of EVs across its brands. The company has introduced models like the Chevrolet Silverado EV and the Cadillac Lyriq, showcasing its commitment to electrification. GM plans to launch several new EV models in the coming years, targeting various market segments. Wall Street Journal +6 GM News +6 GM Investor Relations +6 The company is also investing heavily in battery technology and domestic manufacturing. Under the leadership of former Tesla executive Kurt Kelty, GM is focusing on reducing EV costs through innovations like lithium manganese-rich (LMR) batteries, which promise both affordability and extended range. Wall Street Journal +1 Financial Times +1 Autonomous driving and Cruise. GM's autonomous vehicle subsidiary, Cruise, has faced challenges in scaling its operations. In Q4 2024, GM announced it would cease funding the Cruise robotaxi business, resulting in a $0.5 billion charge. Despite this setback, GM continues to explore partnerships and investments to advance autonomous driving technologies. GM Investors +1 Palmetto Grain +1 Global Operations and Trade Policy. GM's global operations have been impacted by shifting trade policies. In response to escalating tariffs, the company has suspended exports of vehicles from the US to China, affecting its luxury vehicle line, the Durant Guild. Additionally, GM has lobbied against California's stricter emissions standards, advocating for a unified national policy to ensure affordability and consumer choice. L. Huff Post. The U.S. Sun Market Outlook. The automotive industry is undergoing a significant transformation, driven by technological advancements and changing consumer preferences. GM's focus on electric vehicles and sustainable mobility positions it well for future growth. However, the company faces challenges such as regulatory uncertainties, supply chain disruptions, and competitive pressures from both traditional automakers and new entrants in the EV market. Analysts maintain a positive outlook on GM, citing its strong brand portfolio, robust financial performance, and strategic investments in electrification and technology. The company's ability to navigate regulatory challenges and adapt to market dynamics will be crucial to its long-term success. Risks and considerations: regulatory environment, changes in emission standards and trade policies could impact GM's operations and profitability. Supply chain disruptions, global supply chain challenges, including semiconductor shortages, may affect production and delivery schedules. Competitive landscape: the increasing number of competitors in the EV market, including established automakers and new entrants, could pressure GM's market share and margins. Technological advancements: the rapid pace of technological change in the automotive industry requires continuous investment in research and development to stay competitive. Conclusion: General Motors Company is at a pivotal juncture in its transformation into a leader in electric and autonomous vehicles. While the company faces challenges related to regulatory changes, supply chain disruptions, and competitive pressures, its strategic initiatives and financial strength position it for long-term success. Investors should consider these factors when evaluating GM's stock as part of a diversified investment portfolio. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions. Akamai Technologies Incorporated, Nasdaq, Akamai, Comprehensive Stock Analysis. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions. Company overview: Akamai Technologies Incorporated is a leading provider of cloud services for delivering, optimizing, and securing online content and business applications. The company operates a globally distributed network, enabling businesses to provide secure, high-performing user experiences across devices and locations. Akamai's services are integral to sectors such as e-commerce, media, financial services, and government. Financial performance: in the first quarter of 2025, Akamai reported revenue of $1.015 billion, marking a 3% increase year-over-year and a 4% increase when adjusted for foreign exchange. The company's non-GAAP operating margin stood at 30%, consistent with the same period last year. Non-GAAP net income was $256 million, flat compared to the first quarter of 2024. Adjusted EBITDA was $441 million, a 6% increase from the previous year. GAAP net income was $123 million, a 30% decrease from the first quarter of 2024. GAAP earnings per share, EPS, were 82 cents, down 26% year-over-year, while non-GAAP EPS were $1.70, up 4% year-over-year. Investopedia +4 Akamai +4 Guru Focus +4 Guru Focus +2 Akamai +2 Akamai +2 Akamai +2 Guru Focus +2 Akamai +2 For the second quarter of 2025, Akamai projects revenue between $1.012 billion and $1.032 billion, with non-GAAP EPS ranging from $1.52 to $1.58. For the full year 2025, the company anticipates revenue between $4.05 billion and $4.20 billion, with non-GAAP EPS ranging from $6.10 to $6.40. Akamai Plus One Business Segments. Akamai's revenue is primarily derived from three segments. Security, generated $531 million in Q1 2025, an 8% increase year-over-year. Akamai Delivery, generated $319 million in Q1 2025, a 9% decrease year-over-year. Akamai +1 Guru Focus +1 Cloud Computing, generated $165 million in Q1 2025, a 14% increase year-over-year. Guru Focus +1 Akamai +1 The security and cloud computing segments combined accounted for 69% of total revenue in the first quarter. Akamai's strategic focus on these areas reflects its transformation into a cybersecurity and cloud computing company. Guru Focus Plus 2 Akamai Plus 2 Guru Focus Plus 2 Guru Focus Plus 1 Akamai Plus 1 Capital allocation and shareholder returns. In the first quarter of 2025, Akamai repurchased 6.2 million shares of its common stock for $500 million at an average price of $81.19 per share. As of March 31, 2025, the company had 146 million shares outstanding. Akamai's strong cash flow and share repurchase program demonstrate its commitment to returning capital to shareholders. Akamai Plus 1 Akamai market performance and analyst sentiment. As of May 23, 2025, Akamai's stock closed at $75.84, approximately 29% below its 52-week high of $106.80 reached on October 18, 2024. The stock has experienced volatility, reflecting investor concerns over the company's future growth prospects. MarketWatch Plus 1 analyst sentiment is mixed. According to MarketBeat, the average 12-month price target for Akamai is $107.65, indicating a potential upside of nearly 30%. However, some analysts have expressed caution due to the company's delivery revenue decline and conservative guidance. Stock analysis. Guru Focus Plus 1 S Plus 1 strategic initiatives. Akamai is focusing on expanding its security and cloud computing offerings. The company has introduced new products, such as the Firewall for AI, to address emerging threats in the cybersecurity landscape. Additionally, Akamai has secured multi-year contracts with major technology companies to enhance its cloud infrastructure services. Guru Focus Plus 1 Stock Analysis Plus 1 Investopedia Risks and Considerations. Delivery revenue decline. The 9% year-over-year decline in delivery revenue may impact Akamai's overall growth trajectory. Guru Focus Plus 3 Akamai Plus 3 Economic volatility. Akamai anticipates heightened economic volatility, which could affect revenue growth and margins. Guru Focus Plus 1 Akamai Plus 1 Competitive landscape. The cybersecurity and cloud computing markets are highly competitive, with numerous players vying for market share. Stock Analysis Plus 2 Guru Focus Plus 2 Akamai Plus 2 Conclusion. Akamai Technologies Incorporated is undergoing a strategic transformation to become a leader in cybersecurity and cloud computing. While the company faces challenges, including a decline in delivery revenue and economic uncertainties, its strong performance in security and cloud computing segments positions it for future growth. Investors should consider these factors when evaluating Akamai's stock as part of a diversified investment portfolio. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions. Moderna Incorporated, Nasdaq, mRNA, Comprehensive Stock Analysis. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions. Company overview. Moderna Incorporated is a biotechnology company specializing in the development of messenger RNA, mRNA, therapeutics and vaccines. The company gained prominence during the COVID-19 pandemic with the rapid development of its Spikevax vaccine. Since then, Moderna has expanded its pipeline to include vaccines for respiratory syncytial virus, RSV, cytomegalovirus, CMV, Epstein-Barr virus, EBV, and varicella-zoster virus, VZV, as well as cancer immunotherapies. Investors Business Daily Plus 2 Investors Business Daily Plus 2 Biospace Plus 2 Financial performance. In the first quarter of 2025, Moderna reported total revenue of $108 million, a 35% decrease year-over-year. Net product sales were $86 million, primarily from COVID-19 vaccine sales. The company incurred a net loss of $1 billion, an improvement from a $1.2 billion loss in Q1 2024. As of March 31, 2025, Moderna held $8.4 billion in cash and investments. For the full year 2025, the company projects revenue between $1.5 billion and $2.5 billion and aims to reduce cash operating costs by $1 billion, with an additional $500 million in 2026. Nasdaq +3 Guru Focus +3 Biospace +3 Monexar AI +2 Chartmill +2 Guru Focus +2 Product Pipeline and Strategic Initiatives. Moderna is advancing multiple programs in its pipeline. Guru Focus COVID-19 vaccine. The company is pursuing approval for its next generation COVID-19 vaccine, mRNA 1283, with a Prescription Drug User Fee Act, UFA, date of May 31, 2025. Stock Invest RSV vaccine. Moderna's RSV vaccine, Resvir, has received approvals in Australia, Taiwan, the UK, and Switzerland. Investors Business Daily +5 Guru Focus +5 Biospace +5 Flu COVID Combination Vaccine. The combined flu and COVID-19 vaccine, mRNA 1083, has exceeded required case accruals for an interim efficacy analysis, with regulatory filings expected in November 2025. Stock Invest +1 Pharmaceutical Technology +1 Oncology Programs. The company is expanding into oncology with its checkpoint program, showing promising early data. Stock Invest +1 Guru Focus +1 Moderna is also implementing cost-saving measures, including reducing research and development expenses and resizing its manufacturing footprint to achieve a more sustainable financial profile. Pharmaceutical technology regulatory and market challenges. Moderna faces several challenges. Barron's regulatory uncertainty. The FDA's introduction of new approval standards for COVID-19 vaccines requires placebo-controlled trials for younger adults, which may delay the approval of the flu-COVID combination vaccine. Investors Business Daily +1 Barron S +1 Market Dynamics. The normalization of COVID-19 into a seasonal commercial market has led to lower vaccination rates, impacting product sales. Biospace competitive landscape. The biotechnology sector is highly competitive, with numerous companies vying for market share in the vaccine and oncology markets. Analyst sentiment and market outlook. Analyst sentiment toward Moderna is mixed. According to stockanalysis.com, the average 12-month price target for Moderna is $55.53, with a low estimate of $34 and a high estimate of $106. However, some analysts express caution due to the company's declining revenue and regulatory challenges. Barron's stock analysis. The stock has experienced significant volatility, with a 7.8% decline on May 21, 2025, following the withdrawal of its application for the flu-COVID combination vaccine. Stock Invest +2 Investors Business Daily +2 Market Watch +2 Conclusion. Moderna is at a pivotal point in its transition from a COVID-19 vaccine developer to a diversified biotechnology company. While the company has a promising pipeline and is implementing cost-saving measures, it faces regulatory hurdles and market challenges that may impact its short-term performance. Investors should consider these factors when evaluating Moderna's stock as part of a diversified investment portfolio. Note: this analysis is for informational purposes only and does not constitute financial advice. Investors should conduct their own research and consult with a licensed financial advisor before making investment decisions.